there's another one Thursday and then another one Saturday. The Saturday one is filling up also. So these are short 30, 45-minute workshops just to see if you qualify and if the complimentary class, pure supply demand strategy class makes sense for you. And it all starts with the workshop. Yeah, the complimentary supply demand class, it really takes things, we go over in these FX Street sessions, we spent 45 minutes going over a combination of information and education around the supply and demand strategy, and then we go into the live markets and apply it. And this class is about 3-4 hours long. There's a break in there, don't worry. And it really takes a much deeper dive into all of it and into, if you haven't, I don't know if you've been to my website, the Side and Strategies, but it takes a deeper dive into everything we do there, much deeper dive into the supply demand strategy and all that. So who presents that class? It's typically Seamus. I believe I am presenting part of that. So part of the supply demand part of it, I believe I am, in fact, I'm almost positive I'm delivering part of that. So, and that's the strategy part. So, yeah, I think today's is full. There's some room on Thursday, and then Saturday is almost full. Anyway, there you go. So you can always go to the website and find more information. So hope everybody's doing well. And today's topic, trade like a bank. So where the supply and demand strategy comes from, I know there's a lot of people talking about it out there and a lot of websites that sell it and people that teach it and all that stuff. I started it, way back on the trading floor, and then spent many years trading it before even thinking about getting involved in the trading education or information industry. So what I've seen over the years is because most people that talk about it and teach it and everything now, didn't really spend any time, trading it. What's happened over that time, and people that get bits and pieces of the information, it has become more complicated, and now there's all these rules and all this stuff. When the reality, the original version of the strategy hasn't changed at all, and that's what we cover here. That's what we trade. That's what I trade. And when it comes to short-term trading, day trading, swing trading, longer-term investing, the rules don't change. Any asset class, stocks, futures, forex, options, real estate, bonds, cryptocurrency, you name it. We apply all these rules and everything equally. Now, the whole topic of trading like a bank. So, quick little story there for those that don't know. So, I started my career on the trading floor of the Chicago Mercantile Exchange. Not trading my account in the beginning in the trading pits or anything, but on a trade desk facilitating order flow for banks, financial institutions, money managers, hedge funds, even government officials sometimes that would put in orders, you name it. And I did that not having any experience in this business. So, I was like a 5-year-old kid. You show them something and tell them what it is. You say, that's a tree. They know that's a tree. It's not complicated, right? That's how I was. I was this 5-year-old sponge on the trading floor, just taking everything in with no experience, no preconceived notions or anything like that. And what I saw very quickly, and thankfully, the markets had not gone electronic yet. There were still paper orders, right? Yeah, and I see what you're writing in the chat there. What a great job to land. Absolutely. And I'd love to say that I had this master plan and it all worked out great. I did not plan any of that. I'd love to tell you that I was smart enough to think, ooh, you should go get a job down there and learn this stuff. No, that's not how it happened. My hockey friends worked down at the exchange, and they pushed me to come down and work there for the summer so we can all hang out and play more hockey. That's the truth. And but as a very young person, not knowing exactly what you're going to do with your life, and options are open, and you're always exploring. Wow, did I fall into something pretty interesting? So all I saw, again, every day, got down to the trade desk, organized, took orders from, again, big banks, institutions, money managers, you name it, and some retail traders and investors. And I would organize these orders all according to price. You'd have these stacks of orders on the trade desk. Okay. And all that would happen every day, every week, every month, and we're going to look at this on a price chart in a minute, is that those stacks of orders, which were all according to price, what's another way to say that? What were those orders? What are those orders? Supply and demand. The difference is those were some of the market's biggest supply and demand, right? Out there, not just our trade desk, but trade desks around us. And we could see out in the trading pits and look at other trade desks around the trading floor. And you could see where people were bidding and offering. You knew where the significant supply and demand imbalances were, right? Those price points where there was tons of demand and hardly any trades took place because there weren't many offers at that price, right? And you could quickly almost add up in your head, okay, they're trying to buy, they're bidding on like 1,000 over there. They're bidding on 10,000 over there. We have thousands to buy at this price, but boy, there's really no sellers here. You follow me? Okay. This is before looking at price charts. Price charts for me didn't come into the equation yet. And so these are all big banks and financial institutions that are doing this. Now, it was illegal for me to trade my own account at that time because working on the trade desk, you can't do that and trade your own account. It would be cheating, right? You wouldn't lose money. So it was illegal to trade my own account at that time. And that's probably a good thing because it just forced me to watch and listen and learn. And but now you can probably understand why buying a seat on the exchange was very expensive. And at that time, well over $500,000. Okay. What are you paying for? You're paying for access to that information. Yeah. Well, so I saw that and it was very clear. Prices just moved from demand to supply and back again. The low risk, high reward, and high probability entry into a market is at these significant supply and demand levels. Entering positions in the middle, it's low probability. Profit zones are small, right? And risk is defined by how much money you're risking, but you're likely to lose and lose and lose. Okay? And that's what the average trader and investor out there doesn't even think about, let alone what does that look like on a price chart. So my timing happened to be really good. Again, it wasn't my my planning. That was it just happened to be my age and my friends. But all of a sudden, things started to turn into screen-based information, screen-based trading. Well, I didn't know about technical analysis or moving averages or trend trading. I never heard about any of that stuff in the beginning. But I saw that you could start to get price charts at your home. So I was one of the first people to kind of think about leaving the trading floor and looking at the stuff and doing the stuff at home. So I started to print out price charts and bring them over to the trade desk because I had to prepare for my, for life off the floor, trading my own account. What I did was, now here's the one thing I didn't need anybody to tell me because I already knew. I already knew exactly how and why prices turned in markets and how and why price moves in a market. Hopefully you're starting to understand that too. Okay. So all I needed to do in my mind was figure out what that picture looks like on a price chart. So I would bring price charts over to the trade desk. And once the orders were organized, not just by me, by others on the trade desk and others around the trade desk, I saw where in whatever markets, we were right in front of the yen pit. I was there for a while. And then, downstairs you can be around the S&P pit or after a while the NASDAQ pit or whatever, euro, dollar options, whatever you want. Okay, there's a lot of markets. Okay, that's why they call it the Chicago Mercantile Exchange, right? New York Stock Exchange. There's lots of markets there. So I would bring the charts over to the trade desk, and when we were done with the orders, wherever that big stack of buy orders were, demand, or that big stack of sell orders were, the market supply, I would draw lines around those areas, and I would create a zone. Okay, that's where zones came from. Right? I saw, conventional technical analysis after a while. When I saw that, I saw, boy, they're always drawing one line. That doesn't seem realistic. That's not realistic trading. Who can be that perfect? That's going to be the higher, that's going to be the low. So that's why I created the zones, okay, to give ourselves the best chance of entering the position and our best and a good chance of staying in the position for the turn. Does that make sense? And all that would happen was I'd see price would move from demand to supply and off and back again. And as soon as those orders are gone at that price level, and that level is done, right? Just like on the trade floor. And then price would move to the next stack of significant buy orders or demand. All right. So let's move forward here and take a look. And we're going to get to the live charts in just a minute. But I want to kind of keep to the title of the session so you really start to understand this. And then hopefully by the end of the session, you'll generally see what this looks like on a price chart. So this is a screenshot from a lesson I did inside of our program last week. I want to go over it with you. What I see a lot of people out there around the world doing when they look at the supply-demand strategies, they focus on just there's a demand level, there's a supply level. This is what a demand level looks like, or the demand zone looks like, and there it is on the chart. There's a supply zone, and that's what it looks like. There it is on the chart. Be careful thinking like that. That's not enough. We have to understand what's going on behind the candles, right? What's going on behind the scenes as far as order flow. Because that is what is responsible for the creation of the candles that you see. And it's not just about supply or demand, it's about both. Okay? For example, okay, and all of this is about answering two questions. And this was my mission in the beginning because I saw banks and institutions had no problem doing this. They were very good at it. But the average retail and investor, trader and investor, was terrible at it and still is. Okay? Two big questions that matter: where's price going to turn and where's it going to go? If you're a day trader, swing trader, longer term investor that never has any intention of trading, these are still the two most important questions. And what we want to look for is, I think you're right, we understand, we've been through this if you've watched some of these videos, unfilled orders, or more importantly, a significant supply and demand imbalance. This causes prices to turn. In other words, right here where I'm pointing, as soon as all these buy orders are filled against these sell orders supply, you're left with a significant amount of supply. Price will always move lower. It has to. That competition to sell pushes price down. The lack of a significant supply and demand imbalance, okay, or filled orders, this picture down here, facilitates price movement. All right. So ultimately, if you look at this picture here, demand against supply, yeah, at the end of this, once all these orders are filled, price will move down a little bit, but not much. There's not a big supply-demand imbalance there, okay? So the more orders that get filled in a price range, right, that tells us there's a lack of a significant supply-demand imbalance. Price is going to have an easy time moving through that level. Okay. That's okay, Sam Bragg. Good point in the chat. Never went to college. This is your college education. That's fine. I often think back and say, wow, thankfully I didn't pay that much attention. I was so focused on, for example, ice hockey in school. I didn't pay that much attention in a bunch of classes, like my, some of your classes attached to economics or finance, because had I paid too much attention there, I would have learned that to buy a stock, you have to make sure they have good earnings and good a strong balance sheet and plenty of good fundamentals and strong management. And I would have learned that don't buy the stock until the price is in a big uptrend. Make sense? Boy, if I would have learned that and taken that action, I would just be giving money away. Okay? Because that is a recipe for losing money and a disaster. So we don't want to do that. Here's the beauty of this. Whether you have a college education or not, a high school education or not, here is the big secret that the Wall Street professional knows that everybody else doesn't. How you make money buying and selling anything in life is exactly how you make money buying and selling here. In fact, I could take, and again, I don't know, take any business. Maybe someone moved here from a different country, right? And I have a friend whose parents, they like many people's parents here in the United States, they moved here from a different country, and they opened up a small retail business many years ago, similar to like a gas station, right? Like a convenience store. Okay, it actually is a convenience store, meaning one of those corner shops where they sell the sandwiches, the chewing gum, the chips, and everything else, right? So that's what their parents did. Their parents never went to high school, but they've made plenty of money over the years with their corner retail shop. How do they make money? How have they made all this money? They buy the chewing gum at wholesale prices and sell it to everyone else at retail prices. They get the potato chips and all the drinks at wholesale prices, and they sell them at retail prices. Someone answer me this. How does Goldman Sachs make money? How does Walmart make money? Is there any difference? They all get their products or buy their products at wholesale prices and sell them at retail prices. That's all we do here on the price charts. And anyone that thinks that's different, you're likely going to struggle. Okay. If you're someone who waits for everything in a stock to be great, all the news to be great, the uptrend to look great, all the fundamentals and everything else to be great, and you buy the stock, what you're not understanding is how you make money buying and selling in markets, because the question then is, who's going to buy from you? What's the invitation that's going to get someone else to buy from you at a higher price? Because that's the only way you're going to make money. Okay. But let me tell you, that person, that parent that never went to school but makes money at the convenience store on the corner, that understands buying at wholesale, selling at retail, they'd be a fantastic investor. Follow me? All right. So I built I built a lot of stuff over the years, and to help explain how this all works, and yeah, and then emotions come into it too. I see what you're writing in the chat there, right? Doesn't feel good to buy things when prices are lower in the financial markets. But here's what's funny. It sure feels good to buy, that favorite item that you wanted. It sure feels great to buy it when it goes on sale, doesn't it? People don't think that way when it comes to financial markets. Right? Okay. So we built this location map. Now that you could probably call this a probability map too. There's a couple key things that I took out of here only because it's not fair to our members inside our membership. But I think there's plenty here that will help. But there are a couple columns that are missing. So our red and green people over here represent demand and supply. Remember, these represent willing sellers and willing buyers, and then the middle. Okay, that we call the novice space, okay, or relative balance. Notice we don't call it equilibrium, because it's not equal. There's no price levels where everything's equal. It's always an unbalanced equation that takes a certain period of time to play out. Okay, there's a lack of a major supply-demand imbalance in here, which is why you get so much trading activity. Right? This is where 90 to 95% of your volume is going to happen in a market. And a teeny bit is going to happen up here, and a little bit's going to happen down here, but not much. But your potential volume down here at demand is significant. Just like your potential volume up here at supply is huge. Look at all this. Look at all the, the red people up here, or this big red bar. There's tons of potential volume on the sell side, but it never gets filled because there's too much of it and not enough willing buyers. So that competition to sell its supply, competition to buy demand, forces price back to the middle. Okay. We color code our supply demand levels in the program. We have sessions. When I say the program, I mean all the things we have at the site and strategies. You'll see that in the workshop. But we color code the levels based on probability and profit zone, and you can see that over here. We adjust risk based on location of our key supply and demand levels. Okay, because the probability and profit zone is very different out here than it is somewhere in the middle. Does that make sense? Okay. All right. All right, Carlos, I'll try to get to your question in just a minute here. It's a long one, but I will get there in just a minute. So again, just wanted to kind of share a visual with you as we get into the live markets. Let's pull up the live markets here, and we're going to start with we need to start with the dollar. The dollar is the key market to start with. The dollar has been the focus market for us this week, and let me see, Carlos. Let me just read this real quick. One of your content, watching for a while now. All right. Let me see here. Almost done. You know what? Do me a favor, Carlos, because there's a lot in there. Can you email me that? Email me that question, and I will definitely get back to you. I assume you have your email. All right, fantastic. Because I want to make sure that we spend enough time on it. Okay, so the dollar, I don't know if we have any members in our session here with us today, but if you are, as you know, Sunday, we have a Sunday session where we set up the whole week. The focus market for us was the dollar. It was coming into a little demand zone that was not fresh, and we had our key supply zone. And what we said earlier in the week was, and yesterday, if the dollar cannot get above 93.15, then watch out, because there's a lot of room down to demand. And there's some levels down here I'll show you. And if the dollar does fall, which it did, that will help equity index markets move higher, right? So that causes us to ignore certain, pictures of demand in the dollar, certain supply zones in the FX markets, and then also expect the equity index markets to move a little bit higher. And that's kind of what happened. We did get pretty close, looks like a few minutes ago, to our 91.85 demand in the dollar. Let me show you that. So this is a yellow box demand zone. There it is. Okay. So this yellow box demand zone typically means, let me get back to it. Okay. Those you're going to find out here. Our gray box supplier demand zones they're never in the middle. You see how it looks like it's in the middle here? They're never actually in the middle here. These we only take somewhere down here. Yes, they're a little bit in the middle, but not much. They're on the fringe or up here near supply. But we always reduce our risk with these just because the probability is lower, right? Make sense? Does all that make sense? Okay. Because a lot of people think, and when you're starting out, look, when it comes to risk, I try to say this multiple times every session, but make sure you understand the risk, and a lot of people say, make sure you're okay with the risk. It's more than that. A lot of people don't even understand the risk that they're taking on. Make sure you understand the risk. Make sure you are okay with the risk. And if you really understand risk reward probability with regard to supply and demand, should you, in time, not in the beginning, but in time, should we be risking the same amount of money on every opportunity? Do we want to risk the same amount of money on maybe a 2-to-1 opportunity as we do a 30-to-1 opportunity, right? Because we're able to find plenty of 30-to-1 opportunities, right? Especially if you're looking at the FX markets. Make sense? Okay, let's get back to the live charts. Let's keep going. Good comments and questions in the chat. I'll try to get to as many as I can. If not, I think all of you have email, and you can always come to one of those sessions if you want, one of those workshops, and a lot of those questions are answered there too. So if and when the dollar does get down here, and we're seeing that, so we're getting a little bit of evidence here. Take a look. Okay, the fact that price is turning looks like about 20 cents before the level. That's just suggesting what? That we're getting, that we're possibly in the dollar getting, suggesting we're kind of getting somewhere in here now, right? We're getting close to that demand zone. Prices, we're getting a little turn here. I haven't looked at the equity index market since we started the session, but they should be, let's see here. Yeah, so obviously they're turning lower, right? So Jasmine and I initiated a start of a short position very late last night. It was actually early this morning. Okay, and we actually have two short positions on, but just starters, nothing big, and only because the dollar did get close to that demand, and these are not longer term positions, by the way, and then some of the equity index markets being into supply. Let's go back to the dollar. Okay. And along with that, there are three other markets that we look at as key inverse markets, and then two others that are inverse markets, but they're not as key as these, and certainly the dollar is one of those. Having said all that, I'm happy to look at any market you want to. Again, it's FX Street, so we tend to focus a little bit more on Forex here, but nothing wrong with looking at stocks, futures, Forex, bonds, energies, metals, whatever you want. Yes, we could pull up a much larger time frame of the dollar if you want. Let's take a look at that. Okay. Let me just get rid of this. There we go. No problem. So yeah, here are some larger time frame levels. So the dollar is basically on the daily. This is a daily level here, but it's basically been going, up and down through our areas here. Okay. Is this the level you're thinking of? Okay. Yeah, it looks like you're looking at this one. So, Lawrence, all-time high. Yeah, I'm not sure which market your Nasdaq. Yeah, Nasdaq will be good, sure. And we've only got demand zones there, no supply zones. But the other equity index markets all have supply zones. So you can see we've got some areas back here, and from the looks of these are all daily levels. So why don't we go back to the daily chart and we'll scroll back and we can see those. Okay, so we've now come back to this level now for the third time, which suggests we would go deeper or through that level, right? Let's scroll back. Okay, and there's two more yellow box demand zones sitting down there. 91.65 is the next one. Okay, and obviously there's some smaller time frame stuff before that. All right. Yeah, so let me go back and yeah, obviously that dollar is key. We've been going over that for years. Mangus, yes, I love when people ask for the DAX. The DAX is a fantastic market to take a look at. We've focused on the DAX a lot this week. All right, so let me just let me get there. And the DAX, we're going to look at 2 or 3 time frames here. Okay. So looking at the 60-minute chart, one of the things we noticed last week was that price could not get up to our gray box supply zone. Does everybody know why this is a gray box? Because it's inside this range, right? Doesn't mean it can't work. We wouldn't be giving it to you if you didn't think it was decent probability, but it's still inside that range. So, and let me go to the 4-hour chart here. And you'll see above all this, this is a key level up here, Mangus and whoever else is looking at this. 13,511. I know we're not near that at the moment, but since we don't have these sessions every day here at FX Street, so certainly a level we'd want to remember. It's a supply zone in a decent location with the gap. The one caveat to any supply zones in any of these equity index markets, we tend to have a long bias in the equity index markets. We're very careful shorting equity index markets. Why? What makes them different from all the other markets out there? Because they are designed to go up over time. The equity index markets are built and designed to go up over time. So we tend to have a long bias there, especially in the big picture. And are there short-term, shorting opportunities? Sure, but there's plenty in other markets too. So just want to get that out there. Make sure everybody's aware of that. Yeah, and then on the downside, the markets rallied off our demand zone from here, and the next fresh level is quite a bit lower. So right now we're sitting in the middle, not much to do in the DAX, unless you get into one of these smaller time frame areas. Okay, and that is the DAX. All right, let's take a look at some others. Sure, we can take a look at the S&P. All right, so a key level that we're looking at, so the S&P has been sitting up into this supply zone for, I don't know, a good week. Doesn't mean it can't go higher. It's an equity index market, so it can go higher. And just because the equity index markets are, if they're falling, maybe they fall further. I want to point your eye to something here that you need to be aware of and be careful of. Take a look at these 4-hour charts of the bonds, for example. Okay, there's the 30-year. Let me take you to the 10-year. Okay, so if the equity index markets start to fall, be careful. We've got decent demand zones in the equity index markets. However, they are lower, right? The good fresh levels are quite a bit lower. And at the same time, we do have some decent supply zones in bonds. So take a look at the 10-year, right? Bonds get up here into this supply. Equity index markets possibly into demand. You'll see likely to see equity index markets turn higher, right? Also, too, we go down and look at FGBL. I don't know if anybody looks at this market. This is a fantastic market, right? You have the same thing. Couple supply zone up here on the 4-hour. Supply zone a little bit higher on the daily. Okay. So a lot of people think, equity index markets start to fall. They're like, oh, here it comes. Here comes a giant crash. Be careful with that. Just focus on the profit zone. If the profit zone is 2,000 points lower, well, there's risk for a 2,000 point drop. Okay. If the profit zone is 60 points lower, then expect that or something less than that. Now, when you add inverse markets into that, that's key. All right, let's keep going. So, I think we're looking at the S&P. Yeah, so let's go take a look. There is a key level here that we want to focus on. So, one of the significant demand zones below current price that we are focused on is this gap demand around 3,300. Now, I know you don't see a gap here, but that's because we're looking at the 24-hour session. See that? It's not technically a fresh level because prices come back there already. But you can see, let's go over here. All right. When we look at the day session of the S&P or the spiders, if you're looking at ETFs, there's that gap. And here it looks fresh, right? But what you don't see here is after hours, it did come back and test this level. That's okay. Gives us some good secondary evidence that we have likely have a significant supply-demand imbalance in this area. So we'll be watching for that. And there's not a lot of quality demand above this price. So that's something to be very aware of. Okay. And of course, here, this is a level that worked out fine for us just the other day. Yesterday, I believe. But again, second time back, price went into this level. We expect price to go through this level. Okay, this was a gray box demand zone for us. Same thing with this one. We would not want to be a buyer here the next time back in this area. Definitely not want to do that. All right. And yep, someone wanted to take a look at oil. So yeah, if there's any of our members in the session here with us, we've been really focused on oil. So the last key area that we hit was our supply zone up here, 43.40, and I'm sure we've been over these. Have we been over these levels in our last FX Street sessions? I know we've been looking at these for a while. We must have. I don't know if, okay. I don't know if anybody's sitting in these positions, but so there was our big gap supply. And remember, the key thing here for new people, we were never focused on the gap as the supply zone. Now, it did hit the gap and fall a little bit, but the key area around gaps is typically not the gap. That's where retail traders enter positions, and that's why they typically get stopped out, right? Again, there's a reason why, I don't know, 85, 90% of traders lose money and most investors never reach their financial goals. There's a reason why the Wall Street professional makes so much money and everyone else doesn't, okay? You have to focus on what's real, not what you feel. So price just barely kind of came into this level, touched it and fell. So we would keep this level active. That's why it's a yellow box supply zone. Again, notice oil producers and big financial institutions have a lot of supply, lots for sale up here. So if prices came back up into this area, we'd expect them to fall again. If you're sitting in this position, obviously if you have the gap up, this is more because of rollover in the oil futures contract. But you can see that competition to sell up here pushes price back down to the middle, right? Don't forget, again, this is more of a lesson session today. Usually they're application sessions, but don't forget, right? When price comes into this area up here, it spends very little time there because the imbalance is so significant, right? And that competition to sell pushes price back down into here. Okay. There is another level to look at here, and for that we're going to go to the 4-hour chart. Let me scrunch this up a little bit, and I'm just going through the list of markets that you folks want to look at. We're going to look at the 4-hour chart, and these are a bit higher, but if we do get a rally in oil after falling from that other supply zone, eventually if we get up to the 45.30 area, the chart is suggesting there's a lot of oil for sale up there. And we have two levels above each other, on top of each other. If you think of, if we go back to the kind of the original, how I developed the strategy and all that, think of those stack of sell orders on the trade desk. Now you've got two huge ones on top of each other. Great question, Carlos. Carlos is asking, how do you know that you're trading in the novice space? Fantastic question. Let's go to another market and let's take a look at that. Why don't we look at, I saw someone wanted the Dow. Again, we can really go to any market you want. So the Dow keeps poking its head out of the middle and up into, we've got a number of key supply zones up here. There's no other equity index market that looks like that. Okay. But take a look here. See this area, Carlos? Notice all the trading activity right here. Now, you tell me, why is there so much trading activity here? How is that able to happen? How are so many trades going off right here? I mean, the volume must be staggering right in this area. Why is that? In other words, what's not here? A significant supply and demand imbalance. If there was, the picture would not look like that. Okay. The picture would look like one of these. So the presence of lots of trading activity, okay, when you look to the left and you see that, that's the novice space. We don't want to trade inside of there. Okay. Don't forget, what causes price to turn in a market is a significant supply and demand imbalance. That's what caused prices to turn. The lack of that significant supply demand imbalance facilitates price movement. Okay, we don't want to risk any money in here because the odds of prices turning and us predicting turning points is very low. We don't want to do anything in here. However, when price gets above that into supply, right, we want to consider being a seller if we're okay with the risk and reward. When price gets out of that area to the downside and possibly into demand, we want to consider being a buyer if we're okay with the risk and reward. All right. Okay. In the novice space, you're going to see tons of trading activity in here. In other words, the red and green stick figures represent supply and demand. If we replace this picture with a price chart, you're going to see all of the trading and all of the candles and all that here, and hardly any trading activity up here or down here. We've been through that on a prior lesson, and I can certainly, go over that. We can go over that, in a session to come here at FX Street. Does that make sense? Okay. All right. So let's go. The Russell is a great chart to look at too. It's kind of sitting right in the middle, right? Right in between our supply and demand. This market is one of the weaker equity index markets. So again, just sitting right there in the middle of that novice space. Looking at the clock though, we are out of time there. So again, you can get a lot more information too at the workshop. All you have to do, that is a big web address there at the bottom. If you just go to thesidestrategies.com and you can just click on the workshop there if you want to. If not, we will. Many of you have my email. If you have any questions, let me know. And otherwise, we'll see you in the workshop, or we'll see you next time at an FX Street session. Hopefully that was helpful, and have a great day, everyone. We'll see you next time.